You want to save some money in taxes? Well, think about employing your spouse. Yep, employing your spouse. Hey there, my name's Kenneth French. I'm with vastsolutionsgroup.com, where we do tax, finance, and artificial intelligence to lower tax liability for entrepreneurs. Usually, we work with solopreneurs across the spectrum, all over the country, sometimes all over the world. Well, we're going to be talking about just a few items that are really very, very smart in ways to lower your taxes by employing your spouse that a lot of people don't do. But hopefully after this, you're going to be doing it. Let's get going. Pay your spouse tax-free employee benefits, not taxable wages, although even sometimes that depends too. You'll realize no tax savings if you put your spouse in the payroll and pay he or she generally from wages. There's other tax benefits that are indirect to that. But anyway, employee wages, you pay your spouse, as I mentioned, fully taxable. Your spouse employee must pay federal, state, and income tax, etc., though you can put money away from their qualified plan. But anyway, you and your spouse must each pay the half of Social Security and Medicare tax and wages, no matter what, right? In effect, you pay your spouse wages, you're simply moving the income from one place to another. Although you could be, it really depends on the circumstances on that one. I would say you need to talk to a tax professional, your specific tax professional who knows your situation. Now, instead of wages, though, maybe you should potentially pay your spouse entirely or mostly with tax-free employee fringe benefits. Certain types of employee benefits, such as maybe health insurance, not taxable depending on your circumstances and structure of your entities. But also, it could really, really help on the bottom line. But also, if you pay your spouse with tax-free fringe benefits, you need not to pay payroll taxes and file employment tax returns or file a W-2 for your employee. But, don't you have to pay your spouse at least minimum wage? Well, let's talk about that. Not really. In most cases, minimum wage laws don't apply when a sole proprietor business owns his or her spouse as an employee. The same holds true of federal and state employment taxes. Now, think about that. If you're your business, let's say you're a LLC, the minimum wage laws do apply when your business not you as an individual business owner hires your spouse. Minimum wage laws are not enforced, though, by the IRS. That's a very important component to think about. Now let's talk about establishing a medical reimbursement arrangement. Health benefits are normally the largest tax-free employee benefit you can provide a spouse. By hiring your spouse and adopting the right type of plan, really depends on the circumstances, you convert health insurance premiums and other medical expenses from your spouse, yourself, and your children under age 27 into a fully deductible business expense. Gotta like that. If your spouse is the only employee of business, a lot of our clients at vastsolutionsgroup.com, that is the case. You should thinking about establishing a spousal health reimbursement arrangement. Sometimes it's called the 105 HRA. Again, 105 HRA. This is the best possible way to pay full health benefits when you own your own business. With only one employee, your 105 HRA is not subject to the Affordable Care Act, which is really nice. I'm not going to go into specifics here, but you can call in the office, email us, etc. But again, by the way, vastsolutionsgroup.com is where questions can be forwarded. What about taking advantage of other fringe benefits? There's education, job-related education for employee. A spouse employee is deductible by you and not income to your spousal employee. Or life insurance. Employers may provide employees up to $50,000 of group term life insurance, and that could be tax-free. There's also this thing called de minimis fringe benefits. So certainly certain types of relatively low-cost occupational employee benefits are tax-free and deductible by the employee. These can include, meals, snacks, gifts, especially if there's, your spouse is doing marketing for you, sporting events or, theater tickets or whatever the case is. Again, talk to your advisor, your specific advisor who knows your situation. Or, of course, you can retain us and we can help at vastsolutionsgroup.com. So what about Section 127 educational plans? The law prohibits Section 127 benefits to your spouse and dependents under the 5% ownership test. But there's transportation benefits. If you and or your spouse, let's say, work outside the office, you can provide that spouse tax-free transportation benefits, just as you can for any other rank-and-file employee, right? So for this year, for 2022, you can pay up to $270 a month for parking near your business. Now, at the same time, but as a result of the Tax Cuts and Jobs Act, the tax-free transportation benefits to your employees are not deductible by you, the employer. Now, because we are talking about your spouse as an employee, the transportation fringe benefits gives no net benefit to you and your spouse, but it really depends on the circumstances, because you can make it so it does. Make sure your spouse is a bona fide employee. The IRS usually kind of attacks, if you will, spouse employee benefit deductions for health insurance and other expenses by claiming the spouse is not a bona fide employee. Well, your spouse won't magically become an employee because he or she signs an employment agreement saying that he or she is one, but instead, a written agreement can backfire if you and your spouse don't live up to the terms. You got to live up to the terms. Instead, you need to be able to provide, a few of the. I'll throw out a couple things. You can co-own a business. You're engaged in a partnership. You should have a separate bank account if that's the case, and all contracts and government filings should be in your name alone, by the way. Spouse really does work. The spouse must really go to work, do the work, et cetera, to help propel the business going forward. Your spouse gets paid. Yep, you should make sure that all medical and other reimbursable expenses from his or her checking account, and then submit a claim for reimbursement. Generally each month or twice a month, depending on the circumstances. Your spouse works under their own control and direction. You can't push them around, being the main business owner. The IRS uses the common law of right of control test to determine whether your spouse or any other worker is an employee. Your spouse's compensation is reasonable. It's got to be. It can't be too much or too little. It's got to be at market rate. Although, by the way, the IRS hasn't really determined market rate, so that might come into play by talking to your advisor. So let's talk about some takeaways as it relates to some tax savings, some savings as it relates to hiring a spouse. It can result in huge tax savings, huge financial windfalls depending on the circumstance, but only if you pay your spouse solely or mainly with a tax-free employee benefit. The IRS again does not require you to pay your spouse any W-2 wages. There's no law saying that a spouse has to get W-2 wages. Tax-free employee benefits are not limited to health benefits. For example, you can provide certain educational, as I've mentioned, life insurance, working condition, fringe benefits, et cetera, et cetera. For your spouse employee deduction to withstand attack by the IRS, you must be able to show your spouse is a bona fide employee, actually doing work, be regularly paid, work on their own, not be a co-owner of the business, et cetera, et cetera. Few people realize that employee as spouse can save a lot of money, but it really can. Doing so, it's complicated. You got to really understand your situation. An advisor can help you. Or, again, contact us at vastsolutionsgroup.com. We're happy to help because, believe me, this, in some cases, has saved clients tens of thousands of dollars. It's worth the review. It's worth you going and talking to your advisor, going to talk to your lawyer, going talking to your CPA, your tax professional, maybe even your financial professional. It's worth it. As a request from me, please do so. Just go talk to one of your advisors and see if they can help you on any of these things we've talked about. Because if this 10-minute episode has saved you money, we'll feel like we've done our job. Once again, my name is Kenner French with vastsolutionsgroup.com. We're here doing tax, finance, and artificial intelligence to hopefully help you as a business owner to lower taxes and, who knows, even increase your net worth.